What's up, everyone? It is Tuesday, November 18th. This is the SharpMoney live stream sponsored by NoVig. Today we have myself and Sigma Squirrel. We'll be going over the latest news in the sports betting industry. We'll be talking about our favorite educational resources outside of SharpMoney, of course, talking about maybe our favorite podcasts, favorite books, or other YouTube channels that, helped us out in our sports betting journeys. And then we're going to finish up with some plays from the SharpMoney Plus EV bot. So with further ado, we will just get right into the news segment. I guess this is maybe a slow week of news compared to the last few weeks, but there's still some very big things that just happened in the last couple of days, I think, that are good to talk about.
Yeah. Hey, Dime, what's up? Welcome, everybody. Yeah, this what's crazy is this qualifies as a slow news week, because we've been catching it in the face the last 4 or 5 weeks in a row. But two stories, that have national implications, and one where I just want to, kind of take a dump on Chicago, here where I live for a second. The first story, and this is honestly, I think, for our audience, the biggest story, and that is the fact that Kalshi launched NBA player props today. I don't know if you saw that.
I did. So they only have one-sided markets right now,
Exactly.
Just the overs, and I get there's really not much liquidity there. But I guess it must just be the Kalshi trading team pricing everything. I'm assuming that's kind of what I'm seeing right now.
Yeah, I've got it up now. So I'm looking at the Memphis San Antonio game right now, and of course they've got their alt spreads and totals. And my experience, still the case is, if you're not trading the money line, there's just no real liquidity. You can trade the main spread. The totals are pretty weak markets. You can get stuck real quick. These aren't markets you can trade in and out of. And I'm looking at the player prop market. So for example, and I don't know if I can option to show what I'm seeing right now.
Can you add?
Yeah. So there you go. You can see it. All right. So I'm not logged in, but I'm looking at this market, and can you see me scrolling this around here?
Yep. You're on there.
So for example, we got the props markets here on Kalshi, points, assists, rebounds, and threes. That's what we got. And so, and I don't know what Math Wins was on tonight, or where De'Aaron Fox should be tonight, but very, very clearly his market's around 26 points. You can just tell from looking at this that's your median, in the market. And these markets aren't great. I mean, if you want to bet Fox to go off, you can't, right? So I'm looking at the 26 market. I mean, look at this. It's 51 cents wide, and you got 4 bid and 53 offered. You can't play this market.
You can't even take the no side, though, right? So
that's correct. So number one, you can't take the under. You got to bet. I mean, these are akin to those menu items on, DraftKings, FanDuel, et cetera, where, they give you the whole menu of options above the actual over-under list that we actually want to bet, which are the, the two-sided markets. They've got all the plus markets, over certain totals. And even if that was the case, there could still be some interesting edge opportunities, but this market is $400. Okay. And maybe it's just to De'Aaron Fox. I don't know. Maybe people aren't interested. And I go into the 25 market, and, it's not great. And then the 20 plus market, it's not great. I guess there's a lot a lot. Jaren Jackson, not great. So, here's what I'll say. I think it's telling that they continue to push into the props market, which is, over 50% of volume at the regulated sports books. I hope this was a soft launch because these markets are pretty bad. I mean, they're non-tradable. They're non-tradable markets. And so I am excited that they launched, and I am horrified at the liquidity.
Like you said, even the money lines and spreads for Kalshi right now they're still trading very far apart, like 30-cent like gaps in between. It only looks like 2% in win probability, but when it comes to terms of American odds, it's like 20-30 cent gaps where you can get better odds at FanDuel in terms of the amount of hold that's kind of baked in there. Or our sponsor here, NoVig, you're going to find like 1 cent gaps right now. So still the prediction markets are nowhere close to where NoVig is sitting when it comes to how good the prices are on both sides of the line. And same with player props over at NoVig. You can trade player props close to game time pretty much at fair value, like -103, -103 on both sides. So it's nice to see Kalshi expanding into this. Like I said, hopefully this is just a soft launch. It doesn't look like I said, they're only trading one side of the market right now. So I think they're just dipping their toes in the water, getting the product out there. The only people that are betting this are people that have no idea what fair value price means. And they're just, randomly throwing darts at the wall thinking, Fox for 25 points at -600 is a good bet or 98 cents.
Yeah, exactly. Now, so the silver lining in all this is more outs are always good. We always want more outs. More outs are always better, and we're going to get them through prediction markets. The other thing I'm seeing is clearly they have zero institutional partners behind their player props product, because if they did, there'd be more than $400 on De'Aaron Fox's point total tonight. That should be a very liquid market. But our friends at NoVig are going to kick an ass in terms of liquidity. It's still the place to trade tight spreads and lots of volume. But an enterprising SharpMoney member might, for example, start to experiment with posting liquidity on Kalshi. You are clearly not trading against institutions. You may be the only offer on the board of any kind of size. And if you are like most of our members and, limited to some stake factor, you can post something where, we tell you what the fares are, and you can take our data, make yourself a market and see what happens. As always, I'm going to encourage you to experiment because the market is literally yours to price right now. So it's a sad state of liquidity, but one might look at that as an opportunity to, someone might take your 15% worse price to fair. You never know.
I was looking at Robinhood, actually. They feed into Kalshi, and I don't know if I was missing it. I searched around pretty good, but on Robinhood, you could only take a bet. You couldn't make the market either.
That's correct.
So it's a huge turnoff. And first of all, second of all, the fees on there are ridiculous. It was like a 3% fee or something. So like any edge, like personally, me, I trade at like a 2.5 to 3% edge. So if I'm paying a 3% fee, I'm losing money or breaking even. So, and I know Robinhood does a lot of volume for them. So you just know it's all just fish donating money, just, taking their stock profits or losses and putting it into sports betting contracts.
Yeah, it's the zero DTE crowd. They don't care about fees. They're gonna do what they're gonna do. And so, you and I know, and our members know, they're very, price sensitive. They bet prices, not teams, and all things. There is an opportunity to fish. There's an opportunity to fish. I haven't messed with it. I was on a flight back for about 3 hours today and get time to play with it. But I'm definitely going to be testing the waters on what gets filled. There's a lot of eyeballs, but just not a lot of liquidity. But that's that's kind of the product update story that I wanted to talk about. Second thing on the board today, and this was, I don't know, depending on who you talk to, the old heads on gambling Twitter saying, big deal, this is no big deal. I tend to think this is a big deal. And, the story that broke yesterday was FanDuel and DraftKings quit literally gave up their membership in the American Gaming Association. Now, they're also members of the Sporting Alliance, which is a much more powerful industry lobby for them. That's organized really for online sports betting platforms, that have scale in the space. But the AGA, of course, also represents casino interests. And essentially what FanDuel said is, as we expand into prediction markets, because as we announced last week, both FanDuel and DraftKings, the duopoly is in prediction markets to launch probably Q1 or late Q4 in states where they don't have a regulated gaming license, which includes California and Texas are really the big prizes there. And they basically are at odds with the American Gaming Association that, based on the majority of their members who are brick and mortar casinos, they have no interest in saying prediction markets are good or advocating for that position. So FanDuel put it very plainly: as we expand into prediction markets, we recognize this direction is not aligned with the American Gaming Association's current priorities. So for me, the translation is, if the AGA isn't evolving to support these emerging platforms, which you can see why they would not be, the two largest sportsbook operators in America are, basically going to, middle finger it and say, okay, cool, we're going to do it anyway. And that's been my theme in the things that I've published online. It's like, they're going to call the bluff. They don't care if states are going to say, we're going to pull your license. They'll just go in the side door and offer a prediction market then in that state. Like they're responsible for 80% of the tax revenue. It's hundreds of billions of dollars a year, over $1 billion across all the regulated states. States need their money. FanDuel knows it. They're not getting pushed around. They're doing the pushing. And so this was, I don't want to overstate it and say it's a watershed moment, but it's certainly a signal that for the next couple of years, they're going to really press into this. And so, my friends, get it while the getting's good, because this whole thing may come to a stop in the next 18 to 36 months. Get it while you can. The getting is great. Go make some markets and fish.
What I'll add on to kind of talking about FanDuel and them saying that they'll release FanDuel prediction in the states that they currently don't offer their sports books. So I did a little research to see which states they had sports books in now and which ones they don't. So right now they have FanDuel or online sportsbook in 22 states. And the population of those states together is 160 million people. So the non-sportsbook states where they'll have FanDuel prediction markets will be 28 additional states, and that'll be 180 million people population. Like you said, they'll be bringing in California, Texas, and Florida, which is the three biggest states in terms of population. So they have about 18 million more customers now across just those 28 states than they have in sportsbooks, which is pretty incredible. And you also have to think about this too when we're talking about this big boom and opportunity right now. Is, like I said, there's 28 states that sports betting is not legal in. So when these prediction markets launched, these are people that have not had years of experience like most of us have betting into sports. This is brand new to them, and they are going to be just dumping their money out, not knowing exactly what to do. Because, I mean, I was the same way before sports betting launched in my state. I had no idea what fair value was, what implied win probability was. So you're getting all this big surge of population that is just really uneducated, which should be good for us when it's now peer-to-peer betting. So,
yeah, it's certainly interesting. I mean, anytime you see a new market like this with a lot of eyeballs on it, no institutional liquidity, you as an individual risk taker should look at that. Take double click on it, take a second look, because you can literally be the entire market with your $1,000 of liquidity, per prop bet, and spread it across the board at giant edges, and whatever gets filled, you're good on. I mean, that is clearly true tonight in the world of Kalshi NBA prop betting. Very interesting. Very interesting. And then go ahead.
A little story about that. I think you were kind of involved in it too, but when Kalshi came out with the mention markets for like Monday Night Football, and Evie Adam pulled up all the transcripts of all the football games that he could find, and we pulled how often do they say pylon, how often do they say inches, and basically found that these were priced so far off, and we had massive edges, but we were only able to get down, a couple $100 each because there's no liquidity there. But just goes to show you how inefficient these markets are, and you can be the leader in that market even if it's not for big dollars.
That's right. That's right. Number 3, I recognize, this is a local story, but just, a case study in how tone deaf and oblivious to the customer that some taxing entities are here in my hometown of Chicago. Our mayor has doubled down on a 10.25% local tax on, you guessed it, sports bets. So here in Illinois, everybody betting at a regulated book already gets assessed either 25 or 50 cents per bet. And so, if you're betting the sharp money approach where, you and I are literally throwing down 10,000 bets a year, that's $5,000 you're paying the state for the privilege of making bets. So regardless of your unit size, that adds up, man. That's not nothing. And so, they're talking about, this is Mayor Brandon Johnson with a 17% approval rate. Like, no one likes him from either side for lots of reasons, but he unveiled a 10.25% city tax on all sports betting revenue generated within the city limits. So it'll be the nation's first city-based sports betting tax on top of the 40% state tax, on top of the new per wager tax. Chicago's got $1 billion budget hole for next year. But here's what this says out loud. Like, we don't understand who pays these taxes. It's not the sports books. It's you and I. It's bettors who eat this through worse odds or higher holds, fewer promotional dollars. And, the question Chicago hasn't addressed, which is how much are prediction markets like Kalshi or Polymarket or any other, sports trading DCM going to pay in taxes to the city of Chicago? The answer is 0. And because the answer is 0, the city is therefore pushing licensed operators deeper underwater while leaving a massive loophole available. And consumers are going to go where the transaction fees are the least. And it's just yet another example of, I think, just complete lack of awareness that the consumer has more options than ever. This genie's never going back in the bottle. I'll say this so we can end this segment here. In the future, let's say they ban prediction markets. What's going to happen? Fire up that proxy, because you could trade Polymarket for the last 2 years pretty easily when they were banned from the United States. I mean, all these markets just move offshore. It's so dumb. The whole thing is so dumb. I mean, they're not going anywhere. And you think FanDuel is getting into this because they're going to make a $250 million bet that they're going to turn off if the Supreme Court kills prediction market federal preemption over the states. They're going to park that bad boy in the Maldives or Tonga or somewhere else. And you're just going to be betting through Tonga, man. Like, It's just what's going to happen. It's like an investment today in your prediction market knowledge is going to pay off forever. So there you go.
I'll say another news story that we just touched on, I just noticed before we got on stream, is happens to be about NoVig as well. They partnered with a company called Rainmaker, which are AI agents that live trade the prediction markets for you. And they've partnered with NoVig so that you'll be able to sync your NoVig account to their AI trading bots, basically, and it'll automatically trade for you. So that is something we've just kind of discovered, and we haven't looked into what Rainmaker actually is, but it does open up the question of, are we just going to get to a point where everyone is automatically trading sports betting contracts the same way they do stocks? Like, how much that manual trading versus automated trading, I wonder where that's going to get in terms of the sports side of things. And you mentioned too, the more automation that gets put into here, the more efficient the markets get and the harder they're going to be to beat. So are we just going to move to an area where it's almost impossible to beat sports betting markets because it's just too efficient?
The short answer is yes. Of course, that's where this ends. This ends in institutional domination of the most liquid markets. It'd be very hard to beat. But what some of our members know is, I have far more experience trading equity and options and derivative markets, over my life than sports betting, just in the last, 10 years or so. And retail investors can beat the market. They can beat institutions. The strategies are very, very different. You have to pick your spots. And there have been automated bots that you can create that trade for you on platforms like Thinkorswim uses ThinkScript. You can build your own, effectively trading bots. But here's what happens for the commercial bot products in equities markets available to retailers, where you just, you put your money in and it trades for you, is these bots all trade the same strategy. And what that means is everyone's trading the same thing. So there's no alpha or upside in it. Everybody's going to be trading the same stuff, which creates opportunities for you to trade the things nobody else is trading. And that's always going to be our edge, is we're going to look as individual traders in markets where we can pick our spots or find our own proprietary signals and trade, an angle that the bots don't see, or a signal that the bots, don't see. And when the whole market, you're not going to make a ton of money automating the market over the long run as it gets more efficient. So Dime, I think you called it exactly right. 5 years from now, assuming prediction markets are still around, they're going to be highly efficient, and they're going to be full of automation. And I love that that's the case, because lazy sports bettors don't make money.
Yeah.
And so, if everyone's going to, trade into the same algorithm, we're going to figure out what that is. And we're going to find ways around it, or to avoid those markets entirely, and find alpha in markets where you can get it. And so, on the positive side, and for our friends at NoVig, I think it's a huge signal that there is a lot of investment coming in terms of capital investment in tools and technology, the picks and shovels that are going to help you find edges. They'll evolve over time. There is a lot of money coming in on the tool side. I think it's great. It's a bullish signal for the market. I welcome all of it, just all of it. Bring it all on. All the capital into these markets to just scale it up as fast as we can. Just get that volume up. Get it up. I think it's great.
The one thing this kind of reminds me of is when it comes to, let's say these companies built an AI bot that can actually trade profitably. It's almost the same concept as, why sell your sports picks if you could just bet them yourself and make money? It's like, if you built this AI bot that can trade so well, why not just put your own money and let it make money? Why sell the product? So I think there'll probably be a lot of like scammer bots as well, where it's like this, you're buying into something that actually doesn't work, or I don't know. It's kind of an interesting theory there. Like, why sell the product if you can make money with it yourself? And
yeah, that's the right question. I mean,
it's almost even more different though, because I guess when you are a sports bettor, you have limits, and that's the reason, like, we basically sell our picks, is like, we can't get enough money down on our accounts. So, we basically model things out and let other people bet our numbers, and they get down on them. But when it comes to prediction markets, not that the liquidity is endless. It might be in the future almost endless, but that's another reason, like, why would you give away your secret sauce if the liquidity isn't the issue? When on a capper side, that is the issue, and that's why it's acceptable to sell picks. So that's right. That's interesting.
That's right. And you're going to trade into, you'll use a tool to trade into highly efficient markets with low to no alpha. And what happens in these equity auto traders, and they've existed for a while in my experience, and I've used most of them, is they're effective and they work. And as the markets get more efficient, you get fee slippage, and you just get you get fees on both sides of the trade, and you just get feed to death. you piss away your profits and fees, and that's why these things haven't worked in stocks and options trading at any kind of scale. In those institutions that really have an edge in their model are not selling that model to anybody to use. Just like you said, I mean, what we trade, on our side, it's like we don't give away the things that we do that really, I mean, like, we bet edges, right? Our pricing engine is really good. And so, on that front, I'm excited about the innovation. I am wary for our members to dump their money into automated trading AI, because I've just never seen it work in capital markets, not for retail investors.
Here's another thing that just popped in my head about maybe the difference between trading stocks and event contracts here is there are reward systems for posting liquidity in these sports betting contracts. Is there any type of I'm not familiar with stocks or options. Is there any rebate or something like that for posting like liquidity or prices on stocks or options?
Yeah, the rebate, it comes in and it's not generally available to retail investors, even of size. Is you get better fee structures as a professional trader. Certainly, as a professional retail trader, your tools cost a little more, but you get lower fees, which in that game is everything. When you're playing 0.5% micro edges, 50 times a day, really makes a difference. Your transaction fees are generally what makes those strategies unaccessible, but they're accessible to institutions. I think that's generally gonna be the case in prediction markets where they've got a. And I said this when you were on vacation last week, and I did a B- job of filling your very big shoes as the host of the show. Right, it was talking about the opportunity of volume rewards when all of these prediction markets are going to be competing for viability, and volume is viability. I think prediction market volume awards, I'll say it again this week, are going to be akin to the account sign-up bonuses of 2018 to 2020. And I think, if anything, building bots that help you identify markets with volume rewards as an individual market maker and letting you sit or straddle the bid-ask spread and collect volume rewards for relatively low risk if you do it right is going to be the easiest money we've seen in years. And we'll see as these things roll out, but they're going to be competing for your market maker volume, so that De'Aaron Fox has more than $400 on a market. Like, they should be offering volume rewards on their player props. I think they will get there. I think they'll get there. They'll post. You go on Kalshi and look at markets with volume rewards. They'll generally post $2,000 to $5,000, and they'll say, whatever percentage of the liquidity posted within 1 cent of the last traded value equals your percentage you get of this volume reward. And we'll snapshot it every couple of seconds or minutes or whatever, depending on the market. And then they just deposit it in your account. And I can verify that happens. Like, you can just sit on it all day, never trade once, post liquidity, and make money. And it's entirely possible to do it. And it's just another angle to fire at. It's pretty interesting for anyone who wants to put time in.
Yeah, I got to check that out more for sure, because I agree with you. If you can trade at 0% edge but just collect rewards all day, then you're good to go. All right, I think that's it. The only other thing I had written down, which we don't have to discuss, but I'll just mention it. Someone posted that Coinbase is also working on prediction markets. I don't know if you saw that, but it looks like Coinbase is starting to set something up as well, which isn't surprising, because any company that involves money is starting to build prediction markets.
Yeah, and I think the interesting thing for listeners to remember is the controversy or legal gray area in prediction markets is only about sports. It has been ruled that prediction markets for anything else are fine. Anything with an economic consequence. I don't know the exact legal term, escapes me at the moment, but sports betting, is it really an event contract or not? Does it have economic consequence or not? The lawyers will figure all that out. But let's say they shut, when we say shut down prediction markets, what we're really saying is shut down sports event markets. And if sports events markets go away, most of the volume goes away, but you'll still be able to trade, as I said, bet on elections, bet on the weather, bet on mentions, bet on Taylor Swift's album sales. You can still bet on all that stuff, and that'll still be there. It'll still be there, and you'll just be using a proxy to bet on sports overseas. I mean, that's just the way it's going to be.
Exactly. All right. The next segment here is we're going to talk about our favorite educational resources outside of Sharp Money. I got a couple written down. I think they're all actually podcasts or YouTube channels. So I'll go first with, this is one that I actually recently found, and I'm sure you're familiar with it. But the Risk of Ruin podcast, it's very great. It's all about edge betting, and it's not always, every episode is different. Sometimes they're talking about sports betting. Sometimes they're talking about advantage casino play. Sometimes they're talking about credit card, like arbitrage situations, and just really opens your mind up to, like, outside of sports betting, there are still so many opportunities out there to have an edge and make money. Like, for one example, this was one about the credit card, like taking advantage of rewards and stuff like that. But there was basically a sale that was going on the Best Buy website where they had like the Nintendo Wii on sale. And if you bought that for like $25 off, you would also get like a $25 Best Buy gift card. And you could buy it with a credit card. So you would get the credit card rewards, you'd get $25 at Best Buy, and you also got like a cheaper product. So basically what this guy was doing was he was buying thousands of these Nintendo Wiis and then reselling them on eBay for pretty much break even. But he was just collecting the Best Buy points, the credit card points, and just collecting those rewards like crazy. So it was interesting. He said he hasn't paid for travel in like most of his life because of just that one like edge he found. So I just found that to be interesting. Have you seen that podcast?
Yeah, that is actually on my list. We didn't compare notes ahead of time, but on my list, kind of top 5 is Risk or Ruin, which on X, give at Hef Kelly a follow. It is a very well produced, very high quality, researched, very well done podcast with just fascinating stories. Just fascinating stories of folks talking about, in many cases, dead edges. And it's just amazing because, he finds the min-maxers out there that will take an angle and just max it to its absolute most possible max outcome. And it's great education. It's great education. And it's good perspective. And I think he does a wonderful job with it. It's a great podcast. Well worth subscribe.
The way he narrates that, and like it'll be a clip of one of the people talking, and he'll jump in and explain it real quick or give his perspective. You can tell it takes a lot of time to put that together. It's really, really good podcast. What else do you have on your list?
Yeah, I mean, I get a shout out to my man Spanky. The very first betting podcast I ever listened to was Bettors, one of the OG sports betting podcasts. And what I loved about, of course, Spanky's a friend, and we're both on the board of American Bettors Voice, which he co-founded. He gets legends on that show talking about how they did what they did. And, for me, hearing people tell the story of how they did it is the best education as an entrepreneur and or risk taker or sports bettor you can possibly get. You just follow in the footsteps of the legends that paved the way. And just, you hear these stories of, like the first guys to leverage computers to calculate fair values and aggregate pricing from newspapers across the country. That was the ARB strategy in the 80s and 90s. Fascinating. And those kinds of things exist today. And when I listened to that, I just thought, this is just such an interesting space. And so, Spanky last week announced he was retiring Be Better Bettors. There will never be another episode, but go on your podcast platform of choice. Listen to all of them. They are great. He selflessly gives away so much good information in that podcast. It is just a gem of a show and just great content from a great person.
I've watched a few episodes of his, but I definitely need to get into those more. The problem with me is I don't get that much time to listen to podcasts. My commute to work is like 10 minutes, so like I can't get into anything. So one of the downsides of having a short commute.
You gotta get that job in Boston and get that long commute going.
Yeah, right. I'll be listening to 2 hours a day, both ways. Another one I have on my list is the Circles Off podcast, which is done by Rob Pizzola, and they've slowed down on making those as well, but there's a lot of very good episodes there. A lot of my favorite ones are the ones with the bookmakers, and they really talk about how they price lines, why they move their lines, and just the insights of perspective from the bookmaker. It was very helpful for me, especially when I'm thinking about line movement, which is such a big part of our Discord. Just knowing why they move their lines and when they move them, it's just really. Those ones were my favorite episodes by far because they were just so educational and changed my mindset of how I thought about things.
Yeah, I agree. That was one of my first listens as well about the process. And you not bet the process, but Circles Off. You're going to giving away, next on my list. Those guys, Rob and team do such a good job of that. And then you go to Bet Bash and you meet those guys. Good people. They care. They're certainly opinionated. They're not afraid to call people out for their bullshit. And I think that's good. They've also got great sports content and coverage, in their portfolio. But Rob and team do a great job with that show. You can learn a lot listening to that podcast for sure. Bet the process. I kind of jumped myself. Rufus Peabody, a legend in golf modeling, among many other things, co-creator of the Massey Peabody NFL power ranking system, which you can find from our friends at Unabated. That if you are an aspiring modeler or into the origination side of sports analytics and betting, Bet the Process is a fantastic show. Tune in. You get a lot of golf handicapping, which is not my thing. It's just not something I'm doing or I'm interested in. But the concepts that they talk about are really powerful. And you're hearing from people that have, essentially earned retirement dollars from their own origination models. And it's great. And it's encouraging, early in my journey to know, God, you can really do this. You can do this, and you go hard at it. You can do real well. And it's fun to hear it from those guys.
It's actually kind of a funny story. It was like a year ago, I was applying for a mortgage and talking to a mortgage broker, and some of my income is from sports betting. So we were kind of talking about that.
Some asterisk.
So I was basically asking him, like, can I use this as part of my income? And he's like, yeah. I'm like, if you can show it for 2 years in a row, like, it can be used, we trust it. And it's funny, he actually started his firm by betting on PGA. And when he was in college, he got like access to PGA, like advanced stats that was not public. And he used it to build a sports betting model and make a lot of money to start his firm, which is kind of crazy that he was the guy I went through for the mortgage. But that was a really interesting story where he had all these advanced analytics that no one else had, started, pricing all these golfers and started making a ton of money in college.
That's awesome. A dinner conversation goes long enough, you end up talking about sports betting just about anywhere these days.
Right.
And everybody's got their own, like, oh, it's interesting. You do this. What do you know about it? It's funny. Dime, my first experience really betting my unit size on Kalshi was the Scottish Open last year. And I went at that market because of an episode of Bet the Process I listened to. And I literally went, okay, well, let me give this a shot. So what did I do? I bought myself a subscription to Data Golf, and I looked at these Kalshi markets, and I think I took, 6 or 7, players who looked underpriced relative to Data Golf, which is what you used to do at FanDuel and DraftKings in these other markets. before, the Data Golf Alpha was gone, but it was very much there on Kalshi. I think I had like a 70% return in the first market I ever really traded at size. Never bet golf before in my life. Literally picked it up from an idea off a podcast and dug in. And, 3 days later, I've got a lot of risk on the Scottish Open, which I give zero shits about. But it was a lot of fun. It was a lot of fun.
Matt just asked the question. We'll post the link to all of these podcasts in the Discord. I only got one more here, and it's another shout out to NoVig, their predictive programming podcast. That I think
it's awesome.
5-6 episodes, maybe 6 or 7 episodes in, but it's the head of trading over at NoVig, along with Flupp, I think his name. I think did he get promoted to the head of trading?
He took Henry's job as the word. Yeah. So
that's really good. And they're basically talking about the same stuff we're talking about on a daily basis. They're talking about, different strategies, just a lot of the news that's going on with prediction markets and NoVig itself. So it's a really good podcast if you're interested in learning. Like I said, the key in the future is doing as much research as you can on prediction markets and exchanges, because that's where the money is going to be. So definitely just absorb as much information as you can.
Yeah, I'm on planes a lot, as you know. And, always, have my downloaded, list of the podcasts I listen to. And when I listen to podcasts, I'm looking for one thing. It's just one thing I can dig into. And almost always, if I put the time into listening with intention, I'll come away with an idea to explore. Yeah, about half the time it turns into something. And, that NoVig, 30-minute, very digestible, a lot of fun, 2-3 dudes on a couch talking. It's fun. It's just a straight shot, no edits. It's really good.
Yeah, it's good stuff there. That's all I have. Did you have any more honorable mentions here?
Well, I have one non-sports betting podcast, maybe two. Number one, there's most entrepreneurs I know in technology listen to All In. So, that's kind of required listening, for the state of technology markets in general. But I would say there's a podcast called Acquired, which tells the story of the biggest companies in tech and financial markets, but it's a story of how they got where they are. Fascinating podcast, kind of business history kind of stuff. But the one maybe off-brand podcast I would recommend is, one of the original superstars of podcasting is a guy named Dan Carlin, who for years, like 10 plus, has produced a podcast called Hardcore History, which most of it's behind a paywall at his website now. But these are like 3.5-hour episodes, and he did like a 6 episode 18 to 20 hour series on World War I. Or he'll do like 20 hours on Genghis Khan.
That's insane.
It's awesome. It is, and you can learn a lot. As they say, history doesn't repeat itself, but it rhymes. And it's just very interesting to hear him, walk through it. It is the just articulate storytelling, well researched, hardcore history for you history nerds out there is a real fun listen.
I got a question for you. How much podcasts or videos do you intake versus music when you have free time?
All right. So, I do triathlons or whatever. I'm about 50%, 4 hours out on a training run or whatever. I'm 50% music, maybe 50%, news or sports or something interesting podcast. But I don't really watch TV unless I'm watching a game. All of the content I consume is podcast related or CNBC on all day long in my office. I'm just trying to absorb, read the Wall Street Journal every day, every article in every day's newspaper online. I'll read the entire thing every day. I've done that for years, and it's the most important content I consume every day.
Yeah, no, it really is. I was actually surprised that you said 50-50 on, well, when it comes to like running or something, anything athletic, I would think I'd be music 100%. I don't think I could just listen to something. But if I'm like traveling somewhere or in my car, I'm definitely podcast only and like no music ever for the most part. But I
My
did.
kids hate it, but my wife hates it.
Well,
But
yeah,
you
if
know
you get
what?
kids in the car, I guess the music is probably the other
Yeah.
thing, something to think about too for all the members is I heard this from it was another entrepreneur who had like a lawn care business, and he spent 8 hours a day on a lawnmower, and all he did 8 hours a day was listening to like educational podcasts, whether that's on building a business or just educational stuff. And he goes, the amount of time a week that I absorb information instead of just listening to music, like, is just crazy. And it is like, it's a good opportunity to just absorb content like very easily, is just listen to podcasts and YouTube videos.
Yeah,
So,
hack your learning curve. I mean, that's all we're trying to do. I'm just trying to flatten my learning curve. I'm trying to hack it and get what I need to know to take action on as fast as possible. And so I'm just looking to maximize every available hour to learn what others are doing. Because it's inspiring and it's educational.
absolutely. All right, that was a good segment right there. I like that one a lot. I'd like to bring that one back with some other content as well. So there's a big list of stuff, I'm sure. All right,
Oh yeah, let's just get into the book list.
Yeah, so I'm not a big book guy, but I know you guys have some stuff to talk about there. All right, let me pull up the SharpMoney Plus EV bot. We'll look at a few plays. We're kind of running short on time, but we will pull up a couple here. So I'm going to share my screen. And first play, I was already kind of eyeballing this one. This is the Cowboys versus the Eagles.
Oh yes, I liked this one. This is a good play.
Yeah. Limits are still kind of low. They've been praised. This could be they might have opened 3,000, but they've moved a ton. And I don't know if it was there injuries or something in this game, but it opened plus 130. It's dropped all the way down to minus 125. So that movement is basically the win probability is going way up for the under here. If we look at the sharper books, the last few moves by Circa has been towards the under. So we see under 50.5 down to under 50 to under 49, and then a massive jump to under 47.5. So I mean that's a huge move.
Yeah, broke 48. That's a big deal. So if you could get this over 48, I don't know what that play was in particular, but if you got that under that number, you're in great shape.
All right, let's take a guess on how much I can get down on DraftKings.
On a totals market with a 3K penny limit?
Yep.
$70. That's my guess.
I'm going to guess that's probably not a bad guess. I would guess maybe 50. I haven't even been betting them that much because of this exact reason. But NFL markets aren't nearly as bad as any of the other markets. So fair value price is minus 120. So you can play it down to minus 120 if you want to post it on the exchange, which maybe I might just do that after the fact here because I'm probably going to get down. What did you say? 73?
I said $70.
74.
Oh, I know my stake. I know my DraftKings stake factor, man.
Yeah.
It's seared into my head.
So I'm also going to pull this up on NoVig and post it. What I typically like to do here when I have a little room with value is I'll post it in between the sportsbook odds and the fair value price. So I'll post this for minus 117 in hopes that it gets filled right away because I don't like leaving bets out on the market for too long. So instead I get more aggressive with my early pricing and then just expire it after about an hour. And if it doesn't get filled in that 1 hour, I don't have to worry about someone getting injured or someone getting pulled from the game or something like that. So we're going to go in here. We're going to find this game, which was the Cowboys Eagles. It was the under 48.5. I'm going to price it for minus 118. So under 48.5. I'm going to price it for minus 118.
Look at the liquidity. It's good. This is, that's why we love NoVig.
So this is an alt line. That's why this is actually a bigger gap than normal. So I'm going to be best in market when I go to post this. So I'm posting minus 118. It's going to populate the over 48.5 for plus 118. There's really not much money backing this until plus 105. So I'm going to be way ahead of the market here. Hopefully I should get filled.
It's a nice bet.
Sweet. So top of book there. So if you go to the main screen here, we're seeing, spreads for Buffalo Texans here, minus 109, plus 103. So almost plus 104. So you're talking about 5-cent difference there. Very little hold. And these lines will tighten up to literally no vig right before game time. So if you're looking to degen bet, I always say wait right before game time, because you're basically gambling for free because there's no vig baked in. Here's an interesting one. What do we got here? Lakers first quarter point spread. This is Lakers minus 3.5 or minus 115. Bookmaker and Circa have their main line priced at minus 4. So we're getting a better price at minus 3.5. Overall trend has been downwards. Pinnacle moving from minus 120 down to like minus 130. What I really like to see is movement after a limit increase, which we're not getting here. At the 1K limits, the market mostly has just been trending down. So I do like the direction here. Maybe the limit increase without a move indicates that this is the right price. So I'll probably take a stab here. This is probably the highest limits this market will get at $3,000. So
interesting to see. You got 4 data points, 20 cents lower that snapped back there. You don't know if that's someone, trying to, multi-click to get a line to move or what that was. Probably until they could drive a limit increase.
That's how I view it.
That's interesting to me.
I view it like it was getting manipulated, and then it got back to right where it was. So I feel like this number is probably good. Where it got
someone earned themselves a better number.
Good spot. Yeah, exactly. So I know this is one of the takeaways I got from, I think, the Circles Off podcast as well. But a limit increase also indicates confidence by the sportsbook. Like they won't increase their limits if they think if their line is off and they're gonna get slammed. Like, yeah, that does happen quite often. But I think you could almost show as much confidence when a book goes from 1,000 to 3,000 and the line just stays still. It's like no one jumped on that price because it's priced pretty well right now. So sometimes I view it like that as well.
Yeah, and I forget which podcast had the sportsbook manager from Circa on, essentially saying that sometimes they'll just move a number just to see what happens, but they don't fake a limit increase.
Yeah, exactly.
They'll fake a number, but they don't fake a tripling of the amount you can bet. They're not going to screw around with being exposed like that. You can trust a limit increase. You can't necessarily trust a low limit line move.
Yep. I think that was from the Circles Off podcast, and it was I forget his first name. Metcalf was the Circa.
Yeah, Matt Metcalf. That's right.
Matt Metcalf. Yeah. Reload this one. Didn't pop in. Lakers minus 3.5 for the first quarter, minus 115. All right, price is still good there. I typically bet a little bit lower on these first quarter markets because, like I said, the limits are lower. You can't trust your edge as much. So I typically go like a half unit instead of a full unit on first quarter plays. Let's see. Here's one where it's a play we would lay off. Jazz plus 15.5. Really, market's been all over the place. It hasn't moved too much. It's only been moving 8 cents up and down, but overall direction has been increasing the payout, which means the implied win probability is dropping. So I don't love this one. You could, there's no exact answer for every bet and what you should and what you shouldn't take. You could also use that logic where, hey, we just bumped up from $10,000 to $20,000. Nothing's happened in this line yet. Maybe it's priced well now, even though throughout the day it's been moving kind of up and down.
What's the EV on that bet? I mean, you got a shorter odds play in the 160 range. You know,
I don't hate it. I mean,
it's a lot of I mean, at minus 160 on a smaller edge, and I don't, your win probability is a little bit higher, but on a quarter bet, I don't love it.
yeah,
And the slope is reversed from what I like.
yeah, like I said, it's only 8 cents, so it's not like a massive move one way. But other thing you can check too is look at where the other sharp books are moving their main line. It's not priced into the DVIG process, but if you circa went from plus 12 to plus 13, so you don't want to see your team getting more points. That means they think you're going to need more points to cover. So circa's moving the wrong way as well. So I guess I would lay off that one.
Yeah, Gway asked the question, what do you think? This is a bet you take or a bet you lay off?
Yep, I placed that Lakers minus 1.5. I did like a half unit on it. So
what about the 3.5 first quarter?
Oh, was that on FanDuel? Did I miss that?
That's right there. You just passed it. There you go. Oh, up.
This 3.5?
Yeah, the 3.5 number. He was asking about it in chat.
Yeah, that's the one I took, right?
Yeah. Okay. Yeah. Answer is yes, Gway. The answer is yes.
Yeah, we got you. Let's see. Let's go back to DraftKings. All right, here's an interesting one. I don't know if you can see my screen, but what do you think? Oh, that one just disappeared, so it must have been too good.
Yep.
That one had a circa and a pinnacle line that were pretty stable. So if we look back at this Dallas play, the under that we hit earlier in the stream, I mean, under 48.5 is pinging, under 49.5 is pinging, under 48.5 ping twice, I guess. But you sometimes when a book presents an EV play, it'll be laddered, 3-4 plays or points at a time. And my logic here is always I like to play basically 1 units on all the SharpMoney bot plays because EV percentages are usually undervalued. So I typically like to play at least 1 unit. So you could either ladder up where you could say there's 3 plays, you could put 3/4 of a unit on each play, or you just play one of them. But I never recommend betting a correlated bet like 1 unit all the way up. So you don't want to have 3 units on 1 correlated play. Typically what you should do is probably just take the one with the highest EV percentage and just bet that one your full unit. While we're talking about plus EV bots, I'll mention that the links to join the SharpMoney Discord are below. We have a free package, which comes with a bunch of chat channels. We have a community of over 5,000 members that are all looking to be profitable sports bettors. You get free chat channels to communicate with everyone. You get the free DraftKings bot is 100% free. And then you also get our promos channels, which are a list of basically every promo that the sportsbooks offer. And our team that we have hand selected will DVIG those lines and tell you what the edges are. And the plus EV bots are, the plays that we're looking for right now. You get access to pretty much every book you can think of. And there's player props, main lines, everything like that. And then we have VIP, which is a handicapping service that myself, Sigma, and Mathwins all handicap our own numbers with our own models. And we ship those out to members who, most of them, post liquidity on NoVig because it's the best place to get your orders filled. And most of us are very limited members, or have a lot of limited accounts. So NoVig is kind of our main out.
Yeah, it's interesting. Over the last 2 years, we've been running, origination service where we're shipping fares to our members. Last year it was see what we can get down at the best price retail book, and then, let's, maybe go to an exchange. This year, we're literally telling people where to post. The value on the exchange goes straight to NoVig and post here at this price, and they're getting filled, and they're having a great year right now. It's if you're looking for volume, that's a great service. Grayson's asking NoVig plays. We have a NoVig channel. Absolutely have a NoVig channel.
Yeah, I just clicked into it. It was empty right now. So no value there. I mean, right now is not a real good time to look for bets. I don't think any basketball games are pregame right now. Maybe there's one late game tonight.
About 11 p.m. Central, you can start to find overnight NBA start to populate. You can, pick off some some nice stuff. And if the exchanges have the markets up, which is always a question mark, they're getting better at posting those sooner. But you if they've got the market up.
Here's a question. When do you think these retail books will be as sharp as our sharp books? If you're talking about FanDuel, DraftKings, everyone we have over here, they will never be as sharp as the sharp books unless they change how they price and change their whole model of how they make money. Their model is just attract as many square bettors as possible, feed them parlays, take their 10% hold and make money. If you start winning money, they just limit you and they don't have to worry about your account. So basically what they have is a pool of 95% uneducated bettors just donating into their lines. Whether their lines are sharp or not, they're just bad bettors. They're going to lose money over time. And anyone that makes money, they limit them. So they don't have to worry about how good their lines are because no one that is profitable is able to bet on their sports book. So realistically, unless they completely change their model, which they won't, the only book that's really like semi-sharp is FanDuel. I think they have the better pricing system where they move their lines based on action as well. Looks like we lost Sigma here. But yeah, basically sharp books are sharp because they don't limit profitable sports bettors. They move their line based on the information and the bets that they're gathering from them. And the retail books will always just kind of play into the square bettors. I heard of recent partnerships DK and other books are looking into. They're all profitable companies. Do you think one day we could revamp and change their identity, so to speak? I mean, they're looking into the prediction markets. There's going to be a DraftKings prediction market, prediction app coming in the next couple months. So I think that's what they're expanding into. But their retail book will always kind of operate the same, I think. Yeah, so here's a great question, Grayson, which is what the reason that I have all these books pulled up, and I don't know if you saw earlier in the stream, but I will make markets on NoVig based on these softer books. So I don't have Hard Rock, but I can find an EV play and then post liquidity on the exchange, which I did earlier. So let's just go for an example here. So we have the fair value price. So this looks like a great play. Over 38.5 minus 120 for the Buffalo Miami Ohio game. And it looks like Pinnacle dropped from minus 122 down to like minus 140. Hard Rock, which I can't bet, has it at minus 120, which would be a great play if I could bet it, but I can't. The fair value is minus 122 on this line. So I could go post on the exchange a better price than minus 122 and hope it gets filled. So I'll do that right now. If we go and just to show you the example of it, college. This is not a ranked game. Miami, Ohio, Buffalo. So I'm looking for over 38.5 minus 120. Oh, wow. Look at that. NoVig actually has it. Over 38.5. Yeah, I'm going to actually take this, but you could post it. I mean, I wanted to post it, but I'm going to take 250 here. So I got it for minus 118, which is actually a better price than Hard Rock, which is sweet. But typically that doesn't happen. And I would just make that market either minus 120, or sometimes I like to split the difference between the fair value price and the price that I pinged on the sportsbook. So yeah, definitely take advantage of NoVig and put all your alerts on for the books that you don't even have access to, because they'll show EV plays. And if the line movement is good, then you can basically post that at fair value price. And if the line should continue to move that direction most of the time. I don't know if you post. So the question here is, if you ladder the same play with an edge, are you potentially increasing your chance of getting limited? I guess I would say yes, because they look at how many bets beat CLV. So instead of placing one bet that's beating CLV, you're placing three that are beating the closing line. Then yeah, you might be limited quicker. But I don't know if it's based on how much money you're getting, like how much expected value you're getting, or if it's how many bets. And the books aren't going to go and tell you, you know, how they limit customers or what they're looking for, because then we would all just try to dodge it the best we could. But that's my best guess is it probably, if anything, it hurts you to bet 3 of the same things. They all have value, but I think either way, if you're placing plus EV bets, you're going to get clipped at some point, unfortunately. But like you said, you can still make a ton of money even fully clipped. I mean, I'll pull up my Picket. It's my last couple years of sports betting, just part time, almost $78,000 in profit, and this is all like before work, after work, no live betting, just all pregame stuff, and very limited accounts. Like from 1 or 2 months in, I was very limited on my accounts, and have been able to do this. All right, guys, I'm going to wrap it up there. Don't forget to join the Discord. If you're watching this and you're not part of the free Discord, do yourself a favor and at least join that. There's a lot of educational content there and a lot of free plays and promos to take advantage of. Obviously, check out the other paid offerings we have as well. The other thing I'll mention is, if you're not watching this on YouTube, make sure you're subscribed to our YouTube. We were 2 members away from hitting 3,000 subscribers before I started this video. So if we can hit 3,000 subscribers before this video ends, or shortly after, that would be awesome. It's pretty crazy that we've already had 3,000 subscribers. We're really going to be, with these weekly shows we have going on, I'm personally going to be putting a lot of time into growing this channel as much as possible, getting you guys the best content possible as well. So please subscribe if you guys could do so. All right, we will see you. I will be back on streaming Thursday before Thursday Night Football, and it'll be all focused on the SharpMoney Plus EV bot. So make sure you check that out Thursday night around 6:30. All right, thank you guys.